Good morning, everyone, and welcome to Daily Trader with Kevin Hinks. I'm Kevin Hinks. We got two paper money practice trades for you today. But first, let's look at our macroeconomic minute because bonds and stocks are moving today because of two things. Number one, at 7:15 Chicago time this morning, we got the ADP private payrolls report. Now, ADP, as you know, is a wages and payroll service that measures private payrolls. And that number came in 146,000, a little light than the consensus of 165 and below last month's 233, revised to 184,000. Now, bonds sold off on this number and yields rallied. Why is that? Why? Because if you look at the pay insights, for the first time in 25 months, pay for job stayers actually edged higher to plus 4.8%. Job changers ticked higher to 77.2% higher. So a little adjustment in the wages data and the ADP payroll made bonds sell off and yields go higher. Then we got out the second bit of information, and that is the PMI and ISM services, both coming in weaker than expected. PMI services still came in higher than last month at 54.9 and services 56.1. Higher than last month, but lower than expectations. But the ISM services was a pretty significant miss. From 56 last month, the consensus were 55.5 comes in 52.1. What happens then? Then bonds rallied and yields come down as that's a little bit weaker for ISM services. So bond market having a little bit of a volatile day here, but stocks are solid. Up about 0.3% on the S&P, up about 0.9% in the NASDAQ. Okay, there's your macro minute. Now let's get to our trade. Google Alphabet and Amazon are the two names we'll talk about today. First, let's talk about Google Alphabet. Number one, it's one of the valuation cheaper Magnificent Seven names, and their dominance and what makes them a special company is their dominance in things like search. We know that, right? Google is a verb. We know that Google is going to be something that everyone looks at and uses for search. But cloud, they continue to gain market share in cloud, and they're collaborating with, just news out this morning, they're collaborating with Air France and KLM to help and use AI in travel experiences. So, their data analytics, generative AI, data-driven strategies, all those things that they do. Third quarter, beat on earnings per share, beat on revenue. The stock is under pressure because a similar theme throughout our show today, and that government regulation. Remember, they're being investigated by the Department of Justice for search and their dominance in search. But digital advertising is strong, similar to what Amazon sees, right? YouTube is owned by Google and extremely strong and getting stronger as the linear TV universe continues to drift towards streaming services more and more. So this is the name that they're in Google Cloud services, very strong. Not number one or two, but a solid number three in this massively growing segment. But, Google Alphabet was up around $180 and sold off on the Department of Justice and got all the way down to right at the 200-day moving average, which is just under $165, and now has firmed up. And going into the end of the year and how long this will take out. So the trade we have for Google Alphabet is a call diagonal. And what we did, we went out to December 27th and we bought the 170 call. Then we went to next week, December 13th, and sold the 175 call. So relatively simple 3-week call diagonal in Google Alphabet where you're looking for, it's in the calendar spread family, something we do a lot. It's one of our go-to strategies for long deltas, directional plays without using the underlying. There's the significance of a call diagonal. It's in the calendar spread family. You're buying December 27th, selling next week, December 13th. So there's time involved. That's the calendar spread. But there's also a vertical call spread involved, the 170, 175. Now, the risk on this trade is whatever the debit you put. I think I put in around $4. It's trading about $4.35. It's done nothing but go higher throughout the day as Google Alphabet has rallied. But a call diagonal, buying 3 weeks out, selling 1 week out. December 27th, December 13th, 170, 175 call diagonal. All right, there's our trade in Google Alphabet. Now let's go to Amazon. Again, similar story with Amazon in the things that they're dominant in, right? 31% market share in AWS. Slowly but surely taking over convenience shopping. Look at the stocks. Do yourself a little favor. Look at the stocks of Walgreens Boots Alliance. Look at the stocks of CVS. Why? During the recent evolution of shopping and having to lock up, everyday shopping needs, the convenience store is switching to Amazon. Their numbers keep getting bigger and bigger, and they continue to be more dominant. Also, look at a company like Target that are struggling, finding their niche in current retail environment in e-commerce. Now, cloud, 31% of cloud, like I already mentioned. Their market share continues to grow. They continue to dominate. And by the way, here's the good news for AWS and Microsoft Azure and Google Alphabet. The pie is getting bigger. More and more people are using the cloud. So not only are they fighting for market share, but the overall pie is getting bigger. Now, they're also Amazon, what I like is they're getting into the lower price retail. They keep expanding their footprint in retail. So they're competing now with lower priced apparel. They're getting into healthcare deliveries, and they just continue to chip away, and they keep that more and more acceptance over time. The age demographic of their shoppers keeps going up as they get more and more popular. So we looked at, and by the way, Amazon this morning up 2.7%. Why? Regulation and intervention. They're currently, this morning announced, being sued by the Washington, D.C. Attorney General over allegedly excluding some neighborhoods from Amazon Prime delivery. By the way, also getting into streaming with Amazon Prime and getting into live sports is another great thing that Amazon is doing. So these two companies, very similar in what they're offering, but different in several ways. So the trade I put on, a similar directional trade as in bullish, but we use just the vertical spread here. We went out to the expiration of December 27th, same on the long side, except both options are in December 27th this time. So about a 3.5 week trade, buying the 215 call, selling the 220 call. Currently trading, I think I put it in at 265. It's currently trading about 280. So it rallied on an up day like this. It's already higher than when we looked at these. The risk on this trade, the debit paid. Based on the underlyings rallying, can you adjust your strike prices? Of course you can. Right? That's one of the things we look at. Remember, the most important part of this discussion is the strategy, not the prices and the strikes. That's what you'll do yourself. The risk on this trade is the debit paid. Remember, the max gain is the difference between the two strikes minus the debit paid. So if it's 280, you can make 220 on this trade. But you've got 3 weeks for that to happen. The December 27th, it's 23 days until expiration. But this is another, if you think that there's a Santa Claus rally, and if you think that these stocks, Google Alphabet, Amazon, remember that have both sold off their recent highs, although 220 in Amazon would be a new 12-month high in Amazon as it hit 219.62 today was a recent high. So it's already moving into that zone where this would be a profitable trade. Doesn't mean it's going to be into the end of the year, though. These are two bullish trades that we looked at in Google Alphabet and Amazon. And that is our show for today, everyone. Jerome Powell speaking at 1:45 Eastern time today. Watch for any market moves based on that. We've got non-farm payrolls on Friday. We got a Fed meeting on December 18th. This is The Daily Trader, and I am Kevin Hinks. Have a great day, everybody.